Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, let's look at the headlines. Asian shares extend gains following a strong close on Wall Street. Tata Steel aims to double its domestic steel capacity and acquire distressed assets as legacy issues in Europe wind down. In financial services, it's organic growth for now. Chairman N. Chandrasekaran said this to Bloomberg Quint. IMF warned policymakers to be on guard for the next recession, even as it predicted that global growth will accelerate to its fastest pace in 7 years. And it's a mixed bag for Asian Paints after its decorative segment sees a dip in margins in the third quarter. Let's turn to international markets now, and US stocks, like we told you, closed higher on Monday, raising minor losses from earlier sessions as US lawmakers reached a deal that would resume government operations. The Dow, S&P 500 and Nasdaq Composite rose to all-time highs. Bloomberg's Abigail Doolittle wraps up all the US market action in this report.
Stocks rallied in Monday's Wall Street session. The Dow, S&P 500, the Nasdaq all put in new all-time highs. The Dow up more than 0.5%, the S&P 500 up by about 0.8%, but it was the Nasdaq that led the way, up by about 1%. Now, a macro tailwind continues to be the effects of corporate tax reform and tax reform overall. Plus, on Monday, it is, of course, day 3 of the U.S. government shutdown, but Congress appears close to striking a deal for a temporary spending plan that would get the government up and running until at least February 8th. So investors cheering that prospect with more of the rally happening on that news in the afternoon. Now, relative to the Nasdaq outperforming, much of this had to do with the biotech space. Lots of deals on the day. Juno sharply higher, up about 26% on the news that it is being bought by Celgene for $9 billion for the company's blood cancer therapy. We also had the shares of BioVeritiv up sharply, up more than 60%, being bought by French drug maker Sanofi for $11.6 billion for that company's hemophilia drug. So the biotech index, the Nasdaq Biotech Index, up about 3% on the day, more than 3%. Its best day since June of last year, so some real strength. And energy was strong as well. Top sector for the S&P 500, helped out by the drillers, including Halliburton, up more than 6%. Its best day since November of 2016 on a very strong fourth quarter. But Apple, not so much. Worst day of the year, down on a report about the possibility of weak demand for that iPhone 10. Overall, though, and even with bonds being mixed to slightly up, Monday's Wall Street session had a risk-on tone. In New York, Abigail Doolittle, Bloomberg News.
And it seems that risk-on tone has moved to the Asian markets as well, and all of those markets, the early rises at least, have opened quite strong from the previous session, and that's probably taking cues from the strong close on Wall Street. But for more updates on those markets, let's go live to Bloomberg's Rosalind Chin. Morning, Rosalind. All eyes as of now on the BOJ decision?
That's right, but you're certainly also right in another respect, in the sense that, yes, there has been optimism transferred after the US session. Here in Asia, the equities really are climbing again towards all-time highs, pulling again higher and continuing their rally, which so far have been pretty strong in 2018. Now, what we're looking at is the BOJ policy decision that is coming out this afternoon. We're not expecting, an economist that Bloomberg has polled is not expecting any change in policy, but they will be looking out for any hints as to whether there's any change possible down the line as the BOJ looks towards perhaps other central banks and sees what they're doing around the world. But we also want to look today at what has been causing some attention to focus on particular companies here. While the general stock markets are moving high, there are some which are in fact falling. Some stocks which are falling because of some moves which have been happening in the US. So we saw that President Trump had slapped some tariffs on washing machines and solar panels, as high as 30% on US imports of solar panels and as high as 50% on imported washing machines. And he basically took the most punitive measures recommended by the International Trade Commission judges. And what does that mean? What that has meant so far this morning is that companies like LG Electronics have taken a hit. That was down by more than 5% in the first hour of trade in South Korea. Wongjin Energy down by currently 2.24%. That was down about a lot more than that earlier in the session, and that is because, of course, LG Electronics is a maker of washing machines and other electronic consumer devices that go into the US. South Korea has been hitting back, saying that it's asked the WTO to approve a suspension of trade concessions. That basically means it wants to reinstate tariffs against the US. So some of those stocks moving there. The Hang Seng and Shanghai Composite just coming online. Those are pulling higher as well. Of note, there are the gaming stocks like Wynn Resorts in the US. Gave out earnings that topped estimates yesterday, and of course that is helping Wynn Macau as well, up by 6% this hour. Back to you.
Thanks so much for that, Rosalind. Now, let's turn to the Indian markets, and Darshan Mehta and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Very interesting levels to talk about, guys. The SGX Nifty touching that 11,000 mark.
Yeah, that's right, Alex. That's an important psychological mark, that the bulls will want to conquer. But remember, it's the SGX Nifty, so it will be linked to the futures. So the spot probably may take a little more while. But 11,000 was hit on the SGX Nifty. That is an important indicator, which indicates that we will have a gap up opening. And in most cases, if the rally continues, we will have 11,000 on the spot anyway. Now, as far as the ADRs are concerned, most of them managed to do well. There was Dr. Reddy's, which was up 1%. Infosys Tech continues to do well. It was up 1.7%. Tata Motors was slightly weak. It was down almost 0.6%. Wipro continues to slide. HDFC Bank and Vedanta were weak in trade. So that's the broad picture as far as the ADRs are concerned. Now, let's take a look at crude. And crude has managed to gain for the second day in a row. Brent is again coming back to the $70 barrel per mark. So for the second day in a row, you're seeing both WTI crude as well as Brent crude moving up in trade. As far as the commodity space is concerned, how did the base metals close down on the LME? So most of the base metals managed to close with a positive bias. You could see that aluminium was up almost 1.3%. So that was very, very strong. You also had nickel, which was up, which was lead, which was up 1.5%, tin, which was up 0.7%. The only metal that didn't do well was zinc, which was flat in trade, down almost 0.07%. Apart from it, most of the metals that managed to end with a positive bias. COMEX copper has opened with a positive bias. As far as China is concerned, you could see that copper is trading with a positive bias and aluminium is trading with a positive bias. Steel is down almost 0.5% in trade. So mixed cues coming in from China as far as commodities is concerned, but overall it's a positive view on the commodity side. Even the precious metals have opened, all of them have opened with a positive bias: gold, silver, platinum as well as palladium. So these are the broad cues that you're getting in as far as the metal space is concerned. FIs were net biased to the tune of almost 1,600 crores in the market yesterday. What we've seen is that FIs are rather aggressive in the market. DI sold in almost 460 crores, but on a net month basis, DIs probably may slip in the red, but FI extreme strong, going almost close to $1 billion of net buying has already happened by FIs in the cash market. The VIX was up almost 10% in a market that was trading much higher. The Nifty again at levels of close to 11,000, trading at new record highs. So there is enough traction. Nifty IT was one of the primary reasons that the market went up, and that was led by TCS, which moved up almost 5%. What didn't do well, the Nifty Metal and the Nifty PSU index, both of them were trading rather weak in trade yesterday. Now, as far as the contributors are concerned, 71 points a move on the Nifty. Big battle going on between Reliance and TCS. Both close. Reliance is already above the 6 lakh crore market cap. TCS just approaching, just a shy tad bit lower than the 6 lakh crore market cap. So it's the race to #1 in India. Axis Bank came out with numbers and reacted positively to the numbers. L&T is seeing strong traction. On the losing end, HPCL, because of the deal with ONGC, was trading rather weak. HDFC continues to bleed and ICICI was rather weak. But Agam, 11,000 on the Nifty. Futures probably may happen in trade today. Put writers must be having a party.
Well, less than 4 points away from 11,000, Darshan. So, of course, all eyes will be on, that particular mark. It's going to be very, very important to watch out for. It's not too far away. SGX Nifty, as Darshan has already mentioned, is already above that mark. That said, we've seen unwinding in the futures. But, of course, do remember that this is expiry week, because of which we're looking at a decline as far as January futures go. It'll be the same for the Nifty Bank as well. We will see, decline of as much as 3.5%. So that said, moving in, we have seen a surge of 10% in the India Volatility Index. Now, something is got to give somewhere. and this could be a matter of concern, at least as far as bulls are concerned. But moving in, put call ratio now edging up to 1.79, back towards the historical mark of 1.8. Now this is another indication that the Nifty is just moving into an overbought zone. That said, do remember this is still expiry week, so a lot of these variables go a little bit off. But what have we seen yesterday? More writing in the 10,900 put, and that is something that a lot of these traders will be watching out for. This is a positive sign for the bull. So mixed signs coming in as far as, so a lot of these cues come. But moving in, we have Diwan Housing Finance, JP Associates and Just Dial moving into the band. 3 other stocks coming out of the band. So we have Dish TV, GMR Infra as well as Gen Irrigation moving out. Also watching out for some longs in Havells India. We had numbers, earnings, and of course we've had near 3.5% increase there. But it's not going to be about stocks today. It is going to be about the index and whether or not it moves about 11,000 and holds on to that.
Usually it takes a lot to get me interested in futures and options, but then I find myself looking forward to hearing more from you. And you'll be able to listen to more from Agam when he takes up the F&O show later today. But let's take a check on the rupee and the bond market. Shraddha Babla joins us now. Shraddha, what do you have for us?
Well, Alex, it was a volatile day for the Indian currency, but the rupee managed to break a 3-day rally to end almost flattish, or down 3 paise at 63.87 a dollar. This is after the home unit oscillated between a high of 63.71 and a low of 64 per dollar. So it continued to trade in a 30 paise range. However, a record rally in the local equity markets with robust capital inflows cushioned the impact of the fall. On the other hand, dollar paired losses on news of deal to end US government shutdown, but the dollar index still continues to hover around that 3-year low. British pound, however, hit its post-Brexit high of 1.3992 on optimism that Britain will reach a favorable divorce deal with the European Union. But the dollar rupee, however, is trading flattish in the non-deliverable forwards markets. With respect to the bond markets, the 10-year bonds gained, snapping its 2-day loss, whereas the yields on the new 10-year bond closed 4 basis points lower at 7.26%. Global funds also decreased their Indian debt holdings after buying for 3 state sessions. That's according to NSDL data.
Thanks so much for that, Shraddha. On to the big news from last night. The International Monetary Fund has projected that the global economy will grow faster than expected both this year and next, as US corporate tax cuts provide a short-term boost. In its latest World Economic Outlook report, the IMF upgraded its global growth forecast by 0.2 percentage points to 3.9% for both 2018 and 2019. The upgrade comes amidst a global growth pickup as economies across continents recover from the 2008 financial crisis. With regard to individual countries, the IMF has left India's growth forecast unchanged at 7.4% in both 2018 and 19. China is expected to grow at 6.6% in 2018 and 6.4% in 2019. US growth forecasts has been raised by 40 basis points to 2.7%. IMF Managing Director Christine Lagarde has said that the growth in individual countries should be more inclusive for global growth to remain strong.
Global growth has been accelerating since 2016, and all signs point to a continuous strengthening of that growth this year in 2018 and next year in 2019. Growth, in our view, needs to be more inclusive, not only across country, which has occurred over the course of the last few decades, but within countries. And some areas of focus, in our view, require training for workers that are displaced or at risk of being displaced by new technologies and globalization.
Christine Lagarde there, speaking at the World Economic Forum's annual meeting, and Bloomberg Quint's Menaka Doshi is also in Davos for the meeting of the World Economic Forum, and she caught up with N. Chandrasekaran, the chairman of Tata Sons. He says that he faces no interference as he charts out the future course of India's largest conglomerate by simplifying group structure and reviving key businesses nearly 1 year into the job. Listen in.
Very aggressive capital raise at Tata Steel. $2 billion is what you're looking to do. You've already said that some of that will go towards acquisition of stressed assets. How long do you think it will take for Tata Steel to regain #1 position, which you lost to JSW Steel a few years ago, and which now seems like it could take a decade unless you do some very aggressive bidding in the stressed asset scene?
I think it is not about being #1 or #2. I think Tata Steel has a great future. Once this European issue is behind, there will be a significant focus in the domestic market. We have already announced an investment of 25,000 crores for the expansion at Kalinganagar. We are looking at the stressed assets, and let's see what the outcome is going to be. But we have stated our intent that we are committed to the Tata Steel business. We see tremendous opportunities. You shouldn't be surprised if we are doubling our capacity from the current 13 million tons.
In how much time is the question, and will most of that then be inorganic besides the Kalinganagar expansion? Because greenfield at this point in time doesn't seem to be the route that most large steel companies are taking.
So I think, let me not put let you not put words into my mouth, but at the end of the day, our intent is to grow. There is a great opportunity, but it does not mean that we are racing to be this or to be that. I think as long as it makes sense, we will do inorganic.
So what will you be looking for? Mostly pricing, because I'm just curious. A lot of analysts believe that the move up in the commodity cycle doesn't justify inorganic.
You should leave it when I say that we're interested in the stress assets. We're looking at it. The process is on. It's not fair for me to say anything more.
Menaka also caught up with members of India Inc. and asked them what they expected from the Prime Minister's speech that's scheduled to take place today.
We are all looking forward to what Mr. Modi's
event, yes.
Yeah. So it's a great event. I've been coming here for many years, and this is the first time that we are having Mr. Modi, Prime Minister of India. So we are very excited, looking forward to what he has to say.
What must he talk about?
Well, I'm sure he's going to talk about India and how India is becoming a very important economic power in the world, and why everybody should come and invest in India. You know, the demographic dividend and the population, everything is in short supply. So, India is a great country. So I'm sure he's going to sell India like anything.
The progress that India has made over the last few years is pretty well documented and well known. What my expectation is that he would talk about India 2020 or India 2030, because really people don't live in past. People live because you share your vision. So if you were to say what I would like to hear, it is 2030, it is 2020, India vision, India mission.
Okay.
And who better than Prime Minister Modi to share that?
You see, there are two clear things according to me. One, of course, there's a lot of reform that has taken place and taking place in India. We know that by the time these reforms translate on the ground, it takes time. So that's something that I think he should continue to talk about, what his roadmap is for the next couple of years, and let's say even after FY19. Second important thing, in which India has not done much of, but what he has done a lot in the last 3 years, is projecting India as a large player, a player that can be there for the world, a player that should put forth its own views for the world. And I don't know whether he's going to talk about that, but I hope he does.
Yeah, he's in a focus in the World Economy Forum in the Davos. And this is the time we have to position and project country's brand image very, very strongly, and to highlight the truth of the realities. Because there is a lots of perception or impact and other thing is there. I think a great country to invest is this moment compared to all other nations. I think that's the takeaway for today's evening.
No, it's about Make in India.
Okay.
And then all the reforms and the continuity of reforms in India as a growth story.
he's going to set the agenda for India in the global sphere. I think he's going to attract investments. He's going to showcase how we're doing in India in a variety of industries. But I think the key is going to be about jobs and manufacturing.
And do stay tuned to Bloomberg Quint Live to find out what Prime Minister Narendra Modi actually does say when he addresses the World Economic Forum later today. But right now, let's shift focus to the commodities market, and Jayesh Khilnani joins in with all the updates there. Jayesh?
Morning, Alex. So, you know, the dollar weakness has boosted the metal space, both base metals and precious metals. So, if you have a look at the London Metal Exchange, the copper actually closed about 0.5% in the green. So did the index. Now, this was all on the back of, despite the fact that there was a record high refined production in China. As far as other base metals are concerned, we saw that aluminium and lead, that was the top performer, gained more than 1% each, while nickel and tin actually closed marginally higher, with zinc the only metal that closed, marginally in the negative, or you may call that as flat. As far as Shanghai Futures Exchange is concerned, we are seeing that there's mixed trading going on currently in Asian hours, where copper and aluminium are actually in the green, and zinc and steel have declined about 0.5% each. Moving on to the precious metal space, we are seeing that the gold prices have inched above and now trading above the 1330 mark for the third straight day. Now, this is also on the back of the weakness in the dollar index, which is hovering around the 90.3 mark. As far as oil prices are concerned, we saw some bit of stability come into oil prices after yesterday's Saudi and Russia alliance talk. The market actually hesitated on that, whether they will actually continue the production output cut going into 2019, and also the inventory that we are expecting, that is likely to decline as much as 2.5 million barrels for last week. That is as per a Bloomberg survey.
Absolutely. Thanks so much for that, Jayesh. But let's turn to earnings now, and Asian Paints is the company that we're talking about first. They came out with earnings post-market hours yesterday. Yash Upadhyay filed this report on the key highlights.
Well, it was a mixed quarter for Asian Paints. Net sales adjusted for excise duty saw 10.5% growth, coming in at about 4,260 crore rupees versus the Bloomberg estimate of 4,500. A single-digit volume growth in the domestic paints businesses also came in lower despite of the low base that we had last year. Net profit coming in at about 555 crore rupees versus a Bloomberg estimate of 560. Raw material prices shot up significantly, increasing by as much as 14% on a year-on-year basis, as a result of which gross margins came off significantly from 49% to about 42.3%. But it was a surprise on the margins front, coming in on the back of the company's decision to hike prices anywhere in the range of about 5 to 7%, and managing to reduce its other expenses to the tune of about 6.5% on a year-on-year basis. Revenues from its home improvement business saw a robust 20% plus growth for the quarter, coupled with improved performance in its automotive and industrial coatings business.
Now, the only nifty company that we're talking about today is, of course, Indiabulls Housing Finance. Shraddha Babla has all the details there. Shraddha, a bit of a breather post the private sector banks.
Yes, and in fact, Indiabulls Housing has been posting a strong, steady business and earnings growth momentum. So that's expected in this quarter as well. In terms of the key numbers, the net profit is seen growing by 23% to 926 crores. The assets under management growth is expected to remain robust at about 30%, while asset quality is expected to remain steady as well. Now, in the second quarter, gross NPAs for Indiabulls Housing Finance were at 0.8%, the lowest in the last 5 years. So that's a thing to watch out for. So broadly, what people will be looking out for with respect to the earnings is going to be the AUM growth trend and guidance from the management. Incremental spreads given the rising yields and higher exposure that Indiabulls Housing Finance has to market borrowings, and asset quality trends specifically in the corporate and LAP portfolios will be keenly watched, but broadly expected to be a steady quarter.
Absolutely. Thanks so much for that, Shraddha. Now, Asian Paints and Indiabulls Housing Finance, two companies that you have to watch out for with regard to trade today. But Nikki Mirchandani has the other stocks in news. Nikki, what are the stocks on your list today?
Sure. First, tracking bunch of earnings today, two disappointing numbers coming in, and we have two set of good numbers. If you look at the Rallis India, it's a disappointing number coming in from the company. Top line seems to be good enough at 18.5% growth that we're looking at on year-on-year basis at a number of around 390 odd crore. Net profit, however, is muted with almost flattish kind of growth that we're looking at. But then the weakness creeps in from operational performance, which is EBITDA has come down by nearly 14% on year-on-year basis. Next in the list, we have Saskin Tech. There also the company has reported a weak set of numbers. Revenue is up by 5.6% on quarter-on-quarter for this company. Net profit is also up by 8.5%, but then operationally it's a weak performance coming in from the company. EBIT has come down by 11.7% for this company at a number of around 15 odd crore. Now tin plate, now this one number I'd like to highlight because it stands out and it's an amazing set of number. If you look at the revenue, that's risen by as much as 146% year-on-year basis. Net profit is up by 189% for this company, and margins, although they have contracted, but then the whole EBITDA number, that's almost grown by 90% on year-on-year basis for this company. Just Dial 2, it's an operationally strong quarter that we're looking at. Next in the list, we have Adhunik group firms. Now, Financial Express exclusive, it says Edelweiss, ARC and Stray Arm has bid for the insolvent 4 group companies which are currently going through NCLT proceedings. Overall, 24 firms have expressed interest for these 4 group firms by Adhunik. These companies include Adhunik Metals, Orissa Manganese, Zeon Steel and Adhunik Alloys. Next in the list, we have Max India. Now there the KKR has again set to back the company's promoter for infusing and capital of around 2,000 odd crore. This will be for your growth purpose and also to rework the debt at promoter entities. Next in the list, we have IOC. You might just see some reaction coming in from the stock, given that the company's board is expected to meet on Jan 30 to consider the bonus issue. Kalpataru Power Transmission, that's another counter that we're tracking and is on list. The company has bagged an order worth 871 crore. HSIL is has commissioned 160 crore pipe manufacturing in Telangana. Now this is first of its kind manufacturing facility that we're looking at, and with a production of around 60,000 MT, which is expected to scale up by 2020. Om Metals, there the company has reached an agreement with Jaipur-based developer Ria Garments. There you have the agreement where Ria Garments has withdrawn the claim on land measuring 56,000 square meters. Now that's one good development for the company because the company had challenged the possession of the company. Also, we have MEP Infra, which is expected to meet various funds today, and the bulk deals coming in from 8K Miles, where the promoter has sold 2.2% stake in the company.
Thanks for that, Nikki. Well, there's clearly a lot to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. Also, watch out for the special coverage of Davos. You'll find that on a special page on the website. It's titled Davos, you won't miss it. But there are also a few other stories that we should tell you about, and those are on Bloomberg Quint. First up, the councils representing the 2 Tata trusts in the ongoing court battle against Cyrus Mistri's firms requested the NCLT to consider allowing buyout of the Mistry firm's shareholding, even if their oppression and mismanagement plea doesn't stand. That's on grounds that this would be in the best interest of Tata Sons. Now, DP World, the Dubai-based port operator that manages terminals from Hong Kong to Peru, and India's National Investment in Infrastructure Fund plan to jointly invest up to $3 billion in India. Well, that's a wrap on this edition of Daybreak. All you need to know is up next, so do stay tuned. This is Bloomberg Quint.